Okay. Hello, everyone, and welcome to another Envision Money Making Sense, illuminating financial moves for the savvy individuals out there, which are all of you. And we thank you all for attending and coming in. We're going to get started in about 60 seconds here, just waiting for the last couple of people to trickle in. I know there was a little bit of initial lag from what I can see, but it seems we're up and running now. Okay. Let's get started proper. As I said, hello everyone, and welcome back to another Envision Money Making Sense. Today we are talking about values-based investing. For any returning individuals or anybody who's watching this on a replay or recording, quick plug that all of these presentations get recorded and uploaded to the cloud. If you already have registered for it, you'll be getting a follow-up link, regardless of if you attended the webinar at the time it was held or not. But if you didn't register for this one or potentially the next one, whatever, just email us, let us know, and we can get you on that list and send you the recordings, no problem. Some of you may be wondering, hey, you guys talked about values-based something kind of investing back in October. Not October, September. That is correct. Today, we're taking a much, much deeper dive with two wonderful presenters. As always, we have our lovely James Brewer, head of Envision Wealth Planning, a certified financial planner, named part of the 20 best advisors in Chicago in 2017, 18, 2021, and 22. He is also a Forbes contributor who has written extensively on the subject of values-based investing. He's got some great material over there. But joining us today, straight over from Ethic, is Corrinne. Excuse my stutter. She is a relationship manager at Ethic, joined their company in January 2020, manages their independent RIA client channel. As a client relationship manager, she supports new and existing clients in creating values-aligned strategies with Ethic and their understanding of Ethic's technology, sustainability, and portfolio management. Before joining Ethics, she worked in roles focused on both institutional and retail investors. She has a BA from Duke University, a master's in accountancy from Vanderbilt University, and is a chartered financial analyst, CFA, for those of you who know, and a CPA. So welcome everyone to this next edition. I think you're all going to have a great time and learn a lot. James Brewer, why don't you take us from here?
All right, thanks. Well, I know everyone loves disclosure, so I won't keep it up too long, but the idea is that today is about education, and we're not providing any advice, but education. So I thought that as a lead up to Ethic and our partnership with Envision, I'd kind of go through the envisioneering investment process. And I want you to think of what we do as becoming like the recipe builder. It's kind of called asset allocation. I think recipe sounds a lot cooler than saying asset allocation. So and that kind of starts with developing what kind of blend of stocks and bonds do we want to have based upon someone's time horizon, risk capacity, etc. And then the next thing we do is, well, what kind of ingredients are going to go into the recipe? Do we want brand names if you think about food, but you may have a certain brand that you really like for your food and say, I'll only use that one. But in this case, we're saying, well, how should we factor in values such as racial equity or climate, planet protection, etc. And then what's interesting is you may have to adjust your ingredients. So this is kind of thinking, if I go to, say, 7-Eleven, or I go to Costco, I go here in Illinois at Mariano's or Jewel, depending upon which store I'm in, there may not be the same brand names that I'd like to have. So sometimes when we do things, we have to adjust our ingredients. We're actually, Envision is actually uses the Charles Schwab brokerage platform, so we can do all the things that we're talking about today. And that's one of the reasons why we selected Charles Schwab, because we could do what we hope to provide our clients. So I'm going to refer to the Envision Justice Series portfolios. And those are a series of portfolios, but basically they all kind of use the same ingredients, just in different proportions. So think of it as, well, are you investing in stocks? Are you investing in bonds? And the answer is yes, depending upon the person. On occasion, it's all stock. But then, well, what does that actually mean? Well, we use the Russell 3000. You're like, hey, I never heard of the Russell 3000. Well, popularly you hear about the Dow Jones or the S&P 500, probably the most quoted thing, but that's not the only index. It just seems to be the one that is most discussed on news programs. They don't have a lot of time to tell you about every index anyway. But the Russell 3000 is essentially the top 3,000 United States companies. And then we also want to put some money globally. So a lot of us drive, a vehicle that from a company domiciled in another country. I used to work for Mercedes-Benz USA, so that would be in Germany. And so there's places all across the country. I'd rather all across the world. They have stocks. There's some money to be made there. So, hey, let's look at how we might include that. And then there's bonds. We use a variety of bonds now, but primarily the focus has been on the U.S. intermediate bonds. So those are kind of the generic, if you will, ingredients that we're using and blending them in different proportions. So by taking these and putting them in different proportions, we create this systematic structure. And people like Corrinne might know it as the efficient frontier, or if you've gone to grad school, but we're calling it systematic structure here for those who didn't have that same education. But basically, you'll get some idea that as you change the blend, you start to see a different pattern. But notice that towards the end, as you have the greatest potential for return, it actually also has the greatest potential for an up and down movement. I like to simply say it's up and down movement of your balances, which is usually what potentially bothers people. But ultimately, we usually like the fact that we are more than outpacing inflation and making money and growing our capital. But know that we have recipes inside of each one of these. So we actually have kind of two sets of models. And the first set of models uses mutual funds. These are the brand names that we currently use. We typically do research every year, and we may take somebody out, or we may include someone, but those are the firms. But today we're focused on Ethic. So let's talk about the Envision Justice Series powered by Ethic. Now, you might be asking, well, what is a mutual fund per se? I've heard of the names. A lot of our clients have, say, Fidelity, or maybe it's Vanguard, but exactly what is a mutual fund? So mutual funds let you pool your money with other investments with other investors. So a bunch of people are putting their money together, and then they're able to buy potentially more shares of stock than they otherwise would have been able to do on their own. And that also helps them access a wide variety of different types of asset classes. So from that S&P 500, better known as large cap, to the Russell 3000, which is kind of a blend of large and mid. And then there's mid. So there's lots of different classifications, international as well. But one of the downfalls, if you will, of that is that they're run by professional money managers that have the discretion on what they want to buy and what they want to sell and when they want to sell it. In fact, part of my story includes a company that I had been working with for a while until I discovered that in their socially responsible, quote unquote, portfolios, they were going to allow the possibility for private prison investments. And I didn't think that my investors, nor me personally, would actually think that investing in private prisons was actually something that was consistent with my belief in racial justice. So then I had to go look for other companies. And that kind of gives you the idea of, like, we don't know what's going to be inside of it. And I can't ask questions per se to get to the manager and have them immediately go change their mind. But you'll now learn about direct indexing and why direct indexing is a great answer to that very problem. So I am going to allow Corrinne to share her screen and tell you more.
Wonderful. Thank you so much, James. Wonderful to be with you all today and really appreciate your time. Exactly. So as James mentioned, we are going to talk about direct indexing today because that is ultimately the vehicle with which Ethic pursues our goals here. But I want to take a quick step back, share with you a little bit about who Ethic is, how we do what we're seeking to do, and then we'll dive into portfolio management and direct indexing, and then how we partner with James as well. So we'll seek to accomplish all of that in the next 20 minutes or so here, but really appreciate the time again today. So I think what's important to know from the get-go here is that Ethic is a asset manager focused exclusively on the mission that all in the future of all investing is sustainable investing. So all of our portfolios that we're going to talk about today, which can pursue personalization towards your unique values, are all kind of pointing the compass in the same direction of moving towards a more sustainable world and a more values-driven world. The way that we do that is that we're exclusively focused on the public equity universe today. So even when we're partnering with Envision, we are just that a sleeve of your overall recipe, or one ingredient in your overall recipe, I should say, of being that public equity exposure. And we work exclusively through advisors like James in order to kind of evangelize our message and get Ethic out there to as many investors as possible. We work with a small but diverse team, which you can see here on the screen. It's really important to Ethic to continue to portray the values that we also invest in line with. So you can see some of my amazing team members here. I think what's important to know about us is we are seeking to achieve a lot of things with just a team of less than 70 people, and technology allows us to do that. So we've built a really scalable approach to our portfolio management in order to be able to pursue personalization and values-based investing within individual accounts and portfolios, utilizing technology in order to do that scalably. I think, maybe asking kind of what does this mean for you, or how should you think about this? And I think what's important to kind of frame this in is there are so many ways we're already acting on our values, and then investing in line with them can kind of just be one in this laundry list of items and ways that we can express our values on a daily basis. So I would say investing in line with your values is often not where individual investors start. We often are thinking about perhaps what kind of organizations we want to donate to, whether it's here towards the end of the year as you're feeling potentially more charitable, or throughout the year. thinking about even just some of the consumer choices that you make in terms of what types of maybe food you buy or companies you purchase from, in terms of maybe their management structure, who founded that small business on the corner. We often make choices with our money in that way. We are also often involved in our local communities or voting in support of actions or values expressions that we care deeply about. And kind of this fourth bucket sometimes takes people by surprise in terms of just our passions or hobbies. But a lot of people that we talk to, their passions or their hobbies are very much aligned with being able to continue to operate in an environment like the one we have today, and not a changing one as much. So activities, whether it's golf or skiing or taking your family to the beach or anything like that, that can look very different in a changing world. And so we're often expressing our values even just in how we spend our free time. So a lot of people are already kind of have lenses with which their values are coming through. JB, anything you want to add there?
Well, I love a little acronym that I came up with, which is Visa, not the credit card Visa, but vote, invest, spend, and advocate. Vote, invest, spend, and advocate. And the beauty of what you'll see shortly is that you get to find out the companies that meet your values. So you can actually then do the consumer choice into companies that have been vetted based on your values through ethic, and as well, you're already invested there. So that's my quick little take on that slide.
Yeah, that's great. Thank you for that. Acronyms are always so helpful. And absolutely, all of those areas are ways that we can express our values. So in terms of what it looks like in order for Ethic to partner with Envision and with James and be able to express your individual investor values in your public equity portfolio, there's really kind of three aspects to that initial conversation that you can expect from working with us and working with James. And so we first want to utilize kind of thinking about how you maybe are expressing your values in other areas of your life. We can either come to you with, if you've already kind of shared with James what values you care about most, or we can take a questionnaire. But either way, we can create an investor mission statement really stating what values you care about most that maybe you are already giving to charity in terms of a women's rights charity, and you realize that you're not expressing that in your portfolio. We'll create you an investor mission statement to really encapture everything that you want to express in your public equity portfolio. We'll then have a diagnostic tool, which actually takes a look at if you're invested anywhere in the public equity market today, how your current investments may or may not align with those values. And so at Ethic, we are focused on personalization and values-based investing, but we also want to give you the tools and the transparency to understand more about where your money is allocated and educate you around that and have that kind of be an ongoing journey with us. So we want to assess your current investments, give you that transparency into maybe where your money's invested today. James had talked a little bit about mutual funds previously, and within the mutual fund space, there are many great asset managers doing sustainable or values-based investing, but there are also many out there that aren't. And so we can drop maybe those funds into our diagnostic tool, and you can kind of see where your dollars are aggregated in companies that perhaps you didn't realize you held, because on your statement, you were just seeing the name of the fund versus the underlying holdings that the mutual funds actually invested in. So that diagnostic can be an interesting step in the process, but ultimately we go through that journey to both create you a mission statement based off your values, and then diagnose your current investments in order to build something personalized to your values and move you towards a more values-based public equity exposure in your portfolio. So we work in partnership with James in order to be able to do that. In terms of what it means to actually express your values, and we're getting into more of that definition of direct indexing here, there are 3 different ways that we really seek to add value into by utilizing a direct index portfolio. So one of the key themes that you may have noticed is what we're talking about here is your direct index portfolio will hold exclusively individual stocks. So you'll have that full transparency directly on your custodial statement that shows you what companies you're holding. And so that's very different than being invested in a mutual fund itself. What that means is that you have the ability to say to James, and delivers that information back to us, oh, I really don't want to hold X name, or I do want to hold Y name, because you're seeing those names on your statement, and we're able to pursue that personalization. But even with that, even without that individual stock level of choosing one name to add in or add out, there's a lot of value we can add in a direct indexed portfolio. And those 3 areas are really in regards to financial performance, tax management, and then that values alignment piece, which is obviously at the heart of what we do here. So in terms of that first piece, we are seeking to keep up with overall index returns. And so what you'll see on your statement is actually a portfolio of potentially 200 to 300 different individual stocks in our effort to track the overall market index. So some of you kind of may be surprised by that high of number, or the first time you would see it on a statement. However, it's important for us to hold a wide variety of names to diversify the portfolio. That's actually what's happening inside of many funds that you may own, but you'll just have the transparency to do that on your statement itself. From a tax management perspective, because you're holding 200 to 300 individual investments, there's frequently, if not always, some companies in that are underperforming. And so we have the ability to sell out of those companies and reinvest you in similar companies throughout the year in order to be able to deliver tax loss harvesting or tax benefits to you that you will offset potentially gains elsewhere in your investment portfolio at the end of the year. It's a huge benefit of holding individual names. And we can also do kind of tax sensitive transitions initially if you have a taxable account and are moving over to an individual stock portfolio. And finally, really the heart of what we do, some of the most important parts in this ingredients in this recipe here is that values alignment. And so we'll spend some time talking about that today. But values alignment really is 2 parts at Ethic. One, we make investment selections based off of your values. So we want the companies that you're seeing in your portfolio to be aligned with those values that you shared with us. But secondarily, we're also doing shareholder advocacy through proxy engagement. And what that means is we don't believe any public company is perfect. And so any of the companies that you're holding in your portfolio, we're going to vote proxies, which typically happen semi-annually, on your behalf in a socially responsible way to continue to move companies towards a more sustainable future. I talked a little bit about this already in terms of what is direct indexing. I kind of got out of my own order here, but there are many, many benefits that holding the individual stocks of a portfolio of a fund versus the fund itself can provide in terms of tax efficiency, in terms of if you have any individual stock positions today, we can work alongside James to help diversify around that. Initially, we can move you over to a new portfolio very tax sensitively. We can do some of that stock level customization I mentioned. If perhaps you always have loved a specific company and you don't care what the data says or the values alignment says, we can include it forever in your portfolio, or the other way around. Even if there's a very values aligned company that you perhaps don't like one of the members of their C-suite or something like that, we can exclude it from your portfolio because that level of customization is available in a single stock portfolio. We do proxy voting on your behalf, and then we're always seeking to provide a lot of transparency and impact measurement on behalf of your portfolio, because we're managing at the account level and want to give you as much information about your investments as possible. And that'll come to life a little bit more here as I move forward and give you a few examples of what that can look like. Perfect. So in terms of the different issues that we cover here at Ethic, I wanted to just spend a little bit of time sharing this list with you because these are our building blocks of creating a values-aligned strategy. And so today, Ethic covers 19 different issues that we see as some of the most significant environmental, social justice, and corporate ethics issues facing the world today. These are based both off of the United Nations Sustainable Development Goals, as well as issues that we see can be really directly addressed in the public equity or the stock market through company behaviors. When creating a strategy, we can create a strategy from perhaps just one of these issues if you're really passionate about one of them, or several of these issues. And we've actually worked with James already to create a few strategies that are in line with Envision Wealth Planning values and values that he's heard from many of his clients already. And so that's one opportunity. And then we can also create a mission statement bespoke to your individual values, if that's more, if you want to get even more granular and want to get even more kind of involved in that conversation. Teased this up here, but we essentially have two routes forward in terms of getting you into a direct indexed values aligned portfolio moving forward. And those two buckets are based off of working. I've had the joy of working with James now for a little more than 2 years, and we've worked to build out 2 different strategies based off of what's most important to many of the clients that he works with. And so that falls into this Envision core value strategies. And then we also have the second bucket of customizing to an individual client's values. Because of that additional customization, that does come at a slightly higher minimum. But it's wanted to share kind of both our options here, but we'll spend a little bit of time really focused on the Envision core value strategies.
Can you keep the slide up for a moment? So
yes.
One of the reasons that we do have those, let's call it standard mutual fund based portfolios, is we do know that everyone per account does not necessarily meet what Ethic requires. So there are times where I say, you kind of can't get to exactly where you want it to be, but we're trying to give people an opportunity to at least be in the game as they advance towards these higher minimums. This week, I had a question too from a client that was trying to understand expense ratios. That's something usually referred to in a mutual fund. In the world of direct indexing, one should see, at least this is my perspective, Corrinne, you can give a different one, is that the 35 basis points, or kind of I'm going to liken that to expense ratio, is the same thing that they're actually providing. That in this case, they're doing the trading, they're doing all the things for you on your behalf. So there is a charge that they have to do for all of that work. So just kind of see that as, a cost, because mutual funds, there is some, actually, I should say, for stocks, there is a cost simply if you were just trading them back and forth. So sometimes people see fees and that starts to throw them, but in order to make all of this happen, but I would kind of see that fee, which typically then is going to be lower than any mutual fund fee that you would find. Or I should say the average. Maybe I should say the average mutual fund fee is going to be higher than that 35 or 40 basis points.
Yeah, completely agree, James. We in terms of, you know, the direct indexing environment, we are always paying attention to what some other managers are doing out there and have very comparable fees relative to some other providers, and believe that we approach the world of impact in such a more thoughtful way. But yes, these fees are based on annual fees. You'd see them on your custodial statement. You'd actually see kind of like a quarterly fee for the management of the account, rather than having it kind of like baked into the overall returns of your portfolio, the way you sometimes see in a mutual fund or ETF. But
and that is ethics fee. Envision has its own fee, so I just don't want people to think like, hey, yeah, that's it. No, we have a fee as well, but I don't want to steal any more thunder from Corrinne.
Awesome. Yeah, exactly. And happy to answer any additional questions around fees or minimums. And I do see some questions coming in just generally about the approach here. So excited to, we'll get to those questions here in a few minutes once we get through these other slides, but feel free to continue to drop questions into the chat. Really appreciate those. So I mentioned I'm gonna focus a little bit on one of the strategies within the Envision core value strategies that we've created with James. And I want to focus on this just to show you overall both what's available to you within this specific strategy that we'll emphasize, but also just generally give you a little bit more information as to kind of what's going on under the hood of these types of strategies. So you'll see here the two strategies we've created together are called Envision Wealth Core Values and Envision Wealth Core Values High Conviction. And what that means is in both strategies—
You need to move to the next slide, I believe.
Oh, perfect. In both of these strategies, we are focused on these same three components of climate change, racial justice, and women's rights, and having impact on each of these three issues. Within the Envision Wealth Core Values High Conviction strategy, we're taking these three pillars of sustainability and just being a little bit more strict in terms of how we're evaluating company behaviors associated with each of these strategies. So in our conversations with you all and with James, that'll be part of the conversation with you in terms of which issues matter most to you, but then also kind of what is most important to you in terms of making sure performance is tightly tracking the index, making sure we have room for tax management, or being values first. And if we're values first in that overall and goals for the equity exposure in your portfolio, that tends to be where that kind of that high conviction strategy comes in here. But we'll talk a little bit about each of these three issues today. So within the Envision Wealth Core Value strategy, we're seeking to have impact on climate change, on racial justice, and on women's rights. And I want to actually kind of zone in on racial justice specifically and what that means in an ethic portfolio and an Envision Wealth Justice Series portfolio, and also what it means to have impact in our lenses in the public equity world. Because a lot of people, as we've talked about already, we're expressing our values in different ways. We can express it through advocacy, we can express it through voting, we can express it through purchasing decisions and charitable contributions. But in the public equity space, we see so many company behaviors that can also contribute to an issue like racial justice. I think what's also helpful here is to see it through kind of how generally the industry approaches it versus all of the other data that we incorporate based off of the deep research that we're doing into each issue and ways that companies can have impact here. So in terms of the industry approach, this likely some of these items may kind of already come to mind for you in terms of how an individual company could have impact on an issue like racial justice, focusing on board diversity and focusing on discrimination policies and other policies and practices that companies have in place, such as labor relations, and also any kind of diversity and inclusion programs in terms of whether it is pay programs or workforce targets, or just simply creating programs to increase the candidate pool. And then also private prison operations. So as James mentioned earlier, he severed a relationship with another asset manager that was considering private prisons still as an option for inclusion in their portfolio. There are many firms out there that do consider private prison operations as a part of their data to be included in a strategy that emphasizes racial justice. We actually go a level beyond operations within the private prison space in order to exclude companies that are at all related to private prisons, whether it's transportation or food service companies, to really holistically divest of supporting those overall operations. But the industry approach you can see here is mostly based off of publicly available information about public companies. That's why it's only focused on board diversity rather than kind of employment diversity, because it's what you can find publicly available about a company. In our lens, I think there are two important things that we to drive home here. One, we see that there's a holistic way in which we can approach racial justice and all of the issues that we cover at Ethic, including within social justice and racial justice, environmental considerations that can have impact on minority populations, social justice considerations, including how from the consumer lens of how companies are targeting certain minority groups from an advertising lens, and then also actually being a employee of that firm and what companies' policies and practices are impacting minority groups as well. And so you can see some of those data points emphasized here within the ethic approach, and I won't read every one to you, but I think what's important to understand about our approach is that we're working with 5 different primary data providers and a long list of secondary data providers in both the nonprofit and academic world to help us determine what it means to have impact on each issue we cover, including racial justice concerns, and then how public company behaviors can impact that across the board. So a few I'll highlight here are the ones over here on the right-hand side. So I think some interesting company behaviors that many other asset managers in the industry don't consider in their approaches are first companies that do predatory lending. So you've probably heard the occasional news story about that in the financial services space. And those practices can really disproportionately impact minority communities. And so we're going to screen out any company that's part of the products that they produce or advertise as a part of our racial justice approach that gets captured in the Envision Wealth Core Justice series. We're also going to screen out firearms as a part of our racial justice approach, just given that Black Americans are disproportionately victims of gun violence. And we think that that's a really important area in which public companies are involved today that's often not considered in the general asset manager approach to this issue. And then finally, I mentioned at the get-go that environmental considerations are a big part of all of our social justice pillars, including concerns around hazardous waste. And so, and how that impacts vulnerable communities. So hopefully even just your takeaway here is just seeing the amount of information that we can consider in an Envision Wealth Core Justice portfolio for each of the issues we cover, and how thoughtful we are in our approach here in an effort to truly have impact on these issues, rather than just utilizing kind of what is the most readily available information in this space. I think it's powerful to kind of see what's happening underneath the hood here, but we also want to be able to show you what that can actually look like in your portfolio. So I'm going to come back here to these slides here in a second. But given that we're on this subject of data, I want to show you what that actually means from your potential portfolio with Envision Wealth. So you can see here one of our examples of company divestment tables or companies that we wouldn't include in your portfolio and be driven by some of those racial justice considerations and just the depth of the information we have here. So companies such as Berkshire Hathaway, or Netflix, or internationally, Alibaba, are companies that don't have sufficient diversity policies and practices in place. And so we wouldn't invest your portfolio in them, given some of those data points that we were just looking at on the prior slide.
Can you stay on that slide for just a second?
Course.
So I just wanted to talk about the benchmark. So if you notice under the 5.02%, it says 430 out of 4,507 companies. They got the 4,507 companies from the Russell 3000 and the MSCI ACWI that I showed you at the beginning. So potentially, if you work with somebody other than Envision, they might have a different set of the total number of companies, but our benchmark does include those two. So that's where that 4,507 companies came from.
Awesome. Thanks, James. Yeah. And so we want to give you transparency around what companies we wouldn't invest you in and the data-driven reason why. But we also want to show you in aggregate information about your portfolio to show you the difference that we're creating here. And so I mentioned, many asset managers look just at racial justice compositions of boards in their evaluation of companies. We think that's really important, but we also want to go under the hood and get data around the employee composition and the manager composition. It's more challenging to find data today in terms of racial diversity within public companies, but we do consider gender diversity as a part of this, given the focus on Black women specifically and wanting to make sure that they are paid similarly within the workforce. So women in the workforce is a consideration within our racial justice pillar, and we'd like to, in the future, have even more data in order to be able to show you additional graphs and additional improvements over the benchmark in this space, utilizing other data as well. And that's part of the experience in terms of investing in a direct index portfolio, is we're always looking for new data sources and we're always updating our data as part of kind of our ongoing management of your equity portfolio. We talked a little bit about private prisons already, so I did want to just share this snapshot of companies that actually still utilize private prison labor today, somewhere in their supply chain or in their workforce, and companies that we wouldn't invest your portfolio in. Again, I just think it's interesting to be able to see some of these companies, and oftentimes some of the largest companies, in the S&P 500 catch people by surprise in terms of still utilizing private prison labor. I think an interesting part of this is actually Costco being one. If you just simply Google Costco, you can actually find their policies and practices on their website and how they intend to stop using private prison labor by 2025, I believe. And the way that we'll then incorporate that is once they've actually stopped that practice, we would then consider them again for our portfolio inclusion, assuming they're aligned with the rest of the values in the overall Envision core justice strategy. And then we talked a little bit about hazardous waste, so I'll just show you this quick snapshot as well. We want to just give you images to be able to see the impact and the difference your portfolio is making. We sometimes include these impact equivalencies as a way to understand what the heck a difference in 1,700 kilograms of waste actually means on an annualized basis. And I think it also just really holds us accountable as an asset manager that you can see that we're doing the things that we say we're doing. So those are a couple of examples of the impact you'll be able to see. I did just want to share then a quick snapshot of those largest holdings that would be in your portfolio, because I do think it's helpful to understand the data-driven reasons why and impact-driven reasons why we're excluding specific companies. But you will still recognize many of the names in your portfolio here, companies that are values aligned with those intentions of climate change, racial justice, and women's rights. And our other goals are to help you keep up with the overall market returns. And so in order to do so, we're going to still be investing you in some of the largest companies in that global index that we talked about. And so you'll see some of those names here: Apple, NVIDIA, Google, some names that you'll recognize there in terms of being included in this portfolio.
Well,
James,
I will say I feel better about going about those monthly United Healthcare premiums, and I might as well swipe my Visa card on any copays.
I love it. I love it. Absolutely. Awesome. So I've jumped around here a little bit, but I am going to turn it back over to the team here, and we can maybe answer a few questions, James.
Sure. So let me see if I can click the right buttons here, and hopefully you see from information to action on my screen. Okay. So if you've attended any of our presentations, we always want to talk about what to do. Corrinne already gave you a couple of ideas. So they already have an ethic health check. So that's one thing that you could actually take advantage of. It would basically show you like what percentage of your current portfolio versus what it would be like if you were in a different situation. What we might find. Okay. I'm understanding I'm sharing the wrong thing. So let me work on fixing my share. Let's see. Now, share screen. Okay, hopefully it's more attractive now. So they'll kind of help you see that and know that part of the lens has to do with the values selected. They also have a values mapping exercise that you can go through. So potentially there's 19 different elements that or pillars rather that you might find yourself fitting in. What I will say is that it's not that even if you selected all 19, would that necessarily change your portfolio? I've tested a few, so adding one or two, you might notice that there's lots of crossover regarding the same companies that are either getting included or excluded. And there's still some factors as well regarding conviction, which is just how strict you're going to be, and actually adding more strict constraints potentially is going to have some effect on your risk and return. But we like to explain that to you so just that you're aware. And some people, that's very fine, but we just want you to know what we're thinking. So to make this easy for you to act, you could simply email OPS, short for operations, at envisionwealth.us, or you could potentially use the QR code here that'll take you to our Contact Us page and let us know what next steps you'd like to take with us. I don't know if JD is going to call out the questions or if Corrinne can see some of them and she's just going to pick off a few.
Yeah, I can jump in here, James, and then I think there may be at least one here that I can let you field as well. Unless JD, did you want to? I saw you on mute. Do you want to call him out?
Yeah, I'll kind of just pitch the questions to you guys if you like. Just go in the order that we got them. So the first one that we received is, am I able to change or shift my values after a period of time?
I love that. Yes, 100%. And we see Ethic has been around for almost 8 years now, and we've seen clients do that with us. I would say it often happens similar to the times that you reconsider your financial goals with James, is if something's changed in your life, or something like that. Many of our clients revisit the values that they're expressing as part of a shift in financial goals, but you can do it. You can revisit them annually if you want to, or we've also seen it happen with some major world events. And when certain things are covered in the news, we often get more questions in making sure clients wanting to make sure that their portfolios are reflecting their values in regards to potentially military defense, or after the murder of George Floyd, there was a lot of concerns around making sure they had racial justice considerations emphasized in their portfolio. So we see it at those key events in US and global news as well.
Great, thank you. The next question is, how does risk factor into a very diverse portfolio?
Yeah.
Well-chartered financial analyst.
Yeah, I can kick us off here, and then James, if there's anything else that you want to include here. So exactly. So the intention of a direct index portfolio is that we seek to track the overall market that we're tracking, or that we're using as the benchmark. And so James had talked a little bit already about using the Russell 3000 as a benchmark for portfolios. And in this case, we are utilizing a portfolio optimization tool, which is essentially taking those 200 to 300 names we're investing you in and making sure that the way that we've selected those companies and also then allocated those companies within your portfolio are tracking 16 different factors in the overall index. So taking that Russell index as an example, it's seeking to track the same amount of growth and value, large cap and small cap exposure that the index has in order to keep up with that market index over time. So the reason we're not just using like 30 companies in order to do that, but rather using 200 to 300 names, is to eliminate individual company risk and really just have market risk as a consideration of being exposed to the overall equity markets. In terms of diversification across asset classes, that's where James comes in as well, in that we're just the public equity exposure in the portfolio, but in terms of the overall asset allocation, seeking to be further diversification for your portfolio with other managers with James. Anything else you want to add there, James?
Yeah, just at the end you touched. So, we are diversifying US and international in the equity or stock portion, and we're doing similar things on bonds, but today I'm going to talk about stocks. So, based upon the selection process, we are diversifying inside of the international as well as the domestic. And if you see risk as deviating much from the expectation of what the index returns are going to be or what they have been, that part is also addressed again in the decision on the conviction aspect. So that's a kind of a different way to also look at risk. But yes, we are considering risk in many dimensions.
Excellent. Thank you very much for answering that. Our next question is, do I have to do my own research in order to know for sure whether companies are aligned with my values? And what if something changes with that company or that investment?
This is such a great question. I love it. So No, we do. We want to make this as accessible as possible and an opportunity for education, but not give you any additional work or homework to do on your end. So the reason that we start everything at the values level of what issues matter to you is because we have an incredible in-house research team that is doing all of the research around what does it mean to have impact on each of those issues, and also how to what data is available today in terms of public company behaviors in order to address that impact. So we welcome your insight if there are certain areas that you're super passionate about or certain companies you're super passionate about, but the goal of keeping it at the values discussion is that it makes it really accessible no matter your kind of what level you're coming at values aligned investing from. In terms of what if something changes with the company, that's part of the process and value we deliver, is that on an ongoing basis, I should say on an annual basis, we're vetting all of the data considerations that are going into an issue like racial justice. So on an annual basis, we're saying, are there other data points that are newly available from data providers that we can be including here that maybe more directly addresses impact on this issue? For example, we recently added a data point around for-profit education and companies that base their company behavior or their product offering on that in many of our social justice pillars. But then on an ongoing basis, we're getting new data that we're vetting and then incorporating in our portfolio management process. So the next time your account trades, it includes the most up-to-date information about every company in the index. And so that's part of the value we're delivering on an ongoing basis there. James, anything else you want to add there?
Well, I'd say that, first of all, it's impossible for Envision to even try to do this on our own. So one of the reasons we work with Epic, and in a prior webinar, Your Stake, is that we need other companies to help do this massive amount of research to try to find out what companies are doing as best as public information is available. So as Corrinne said, there's no perfect company, like there's no perfect persons, and public companies just are lots of individual people. So there's likely going to be some bad actors inside of every company. But as it bubbles up, then, we have sources that are looking. So you don't necessarily feel that you have to. And it could be that you'll see a position changed inside of your investing because they did actually find that. What I do like in their approach is that at least if they tell you, why are you excluding this company? I thought it was a good company. They're giving you tangible reasons that fit with your values. So if you had a different set of values, some companies may be included that are now excluded just because the value shifted. So even to the value shift question, potentially if your values change, companies that were once in your portfolio may now no longer be there. And possibly if you, it could be that some companies may now be included depending upon what your shift in values look like.
Awesome.
Great. Thank you very much. We only have about 60 seconds left, but there is a final question.
I'll take this one.
Maybe you guys can do a
Okay,
real
I will take this one. Okay.
I'm currently worried about another economic crash. Is there a good or bad time to invest?
Okay, I'll take this one. So we have portfolios across a spectrum intended to be something that could work in an environment for you. So I never believe that there is a quote unquote good time to invest. If the market's down, what you could get for $1 now, maybe you can get 4 shares. So that actually makes it a good time to actually get in, as opposed to I want to get in when the time is good and then the stock prices are elevated. You can't get as much and you're assuming that they're going to rise in the future. So I really believe this question is best addressed through, what combinations of stock and bond work well for you, no matter the condition of the economic environment.
Well said, well said. Well, thank you all very much for coming. Thank you, James and Corrinne, for giving us a wonderful presentation and some great education. Once again, all of these webinars are recorded and posted up. Post the webinar on our website and other locations. Please register for the next one. Normally, these are held the third Thursday of every month. However, with the holidays, this one was a little bit earlier, and the same is going to be happening next month. So please join us on December 14th for the final EMMS of the year. Anyway, I hope you all have a great rest of your day and take care. Bye-bye.
Thank you so much.
Thanks.